A very, very, very good morning to all of you. I again welcome you on a beautiful Sunday morning. It is really nice to see how many people are vehemently obsessed with their progress, improvement, and learning, which I must tell you is the key to trading success. It is not about uh, one trade which will make you a billionaire. It is not about one idea which can change the course of your trading altogether. It is always about a series of steps which you take one after the other. And this doesn't happen overnight. It happens in due course. It happens as you evolve in your learning, in your style, in your method, in your practice, in your process, and most importantly, as you gain the more mature attitude towards trading. So here we are to discover a lot of things about technical trading. Some of it you may know, some of it you may have heard before, some of it, a lot of it could be that you have not known also or seen it that way. Whatever it is, always just remember that this is the learning which is going to take part excuse me, this is the learning which is going to take part a very major role as we go ahead in our trading journey. So before we begin, I'll just kind of give a small round of introduction about myself. My name is Mohak Pachisia. I am by qualification, uh, I have almost completed the Chartered Financial Analyst course, and I'm a Chartered Market Technician, which are the chartered degrees of fundamental and technical analysis. And over the years of my roughly 9.5 years of experience with markets, because I started off very young and I started from a very baby step perspective. But due to some of my inspiration in the very beginning, my steps on technical analysis were the very first few steps. So I have, in the beginning of my years, not dealt with trading emotionally, but I have dealt with more trading technically and the nuisance of trading technically, which sometimes people face with half-baked knowledge. So over the years, as I beat the what we people call consistency threshold after a few years of my starting to trade, I really realized that there is a lot out there to be given to people in a more precise, specific way. And trading is not what people look at. I have traded at different firms. I have worked with around more than 100 traders as colleagues over the course of my career. I have uh, taught more than 150 people uh, in my courses. I've been a visiting faculty in St. Xavier's College, which is in Calcutta, which is one of the top colleges in India for technical analysis. Personally, I'm trading right now and I'm managing funds for some clients outside India. Uh, you know, so there's a vast plethora of things that I do, and everything is rooted around technical trading. We also have this course which I teach on technical trading, and I consult people on trading psychology on one-to-one basis as well. A lot of different kinds of people have come to me. I've seen the starting points of commonality, not to generalize, but there most of the people come with the gleam of money. And we are here to make a little shift in the perspective so that you can not just understand that, of course, the money comes, it's a part of the process, but we are here to make that shift so that you understand that the next step which you are about to take from now, this time, this moment, is going to be a very studied perspective of markets and technical analysis. So this was a little about me, and currently I'm in Bombay for quite a few months. I'm based in Calcutta. How many people from Bombay over here? Let's have a raise of hands. How many people from Bombay over here? Let's have a raise of hands. Okay, 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 nice. Quite a bunch of people over here. Yes. So currently I'm here, and I'm trading from here because I trade from wherever I travel. So everything is online these days. But it is not so that because you're trading, which people get mistaken that if something is online, something is easy to access, you have to be irresponsible or little sort of lazy about it. No, it's actually more of a responsibility, and that's what we are here for today. So let's begin. So, I told you what about the stuff, all that I actually do, and what people think I do. is like this. Okay, so let me tell you and clarify you in the very beginning that I do not have a crystal ball. I don't know 100% what is going to happen tomorrow. I don't know 100% what is going to happen the next 2 hours in the market. All that I know is that there are certain things which show me a tilt in the probability. A tilt in the probability. And when that tilt in the probability is there, I know that maybe not each and every trade, but out of 20 trades I take, around 15 or around 17, or maybe even around 14 or 18, whatever the number is, most of the trades out of those 20 series of 20 trades will hit right, will make me money. And why I'm saying with that conviction that it will make me money, because it's a tried, tested, proven thing that this has happened consistently, consistently, consistently. So of course, out of the series of 20 trades, it is impossible for me right now to tell you if that out of 20 trades there will be 4 losers. Will those 4 losers, or maybe in certain cases more than 4 losers, will those 4 losers be happening one in the middle, one in the end, one and two in between, or it is going to happen that the first 2 trades are wrong and there's a streak of very nice, happy, amazing trades, and then the last 2 trades are wrong. So you know that over a period of time, over a series of trades, over a set of market phases, you can come out profitable, you can come out consistent. That is what a technical trader is about. He doesn't have a crystal ball. And because technical analysis gives us consistently and repeatedly showing different signals and patterns, you can trade on them consistently. So who is a technical trader? A technical trader is someone who is having his pulse on the different, through what I will call concepts, on the different variables, which are out there. Now the market variables are very, very different kind. Okay, there can be many kinds of market variables. There can be variables which are related to information that is more factual. There could be that is more sort of news based, and there could be information related what is price based. Now a technical trader focuses on something which is what we call the price based, which is the reality, what you see out there. For example, if I say that the monsoon will be great this time, will I be able to say the day the monsoon news comes that so and so sort of monsoon we have seen or we are expecting? If we see that, am I able to pinpoint that Nifty will be 80 points up tomorrow? Or the no monsoon is bad, can I say the Nifty will be 40 points down tomorrow or 150 points down tomorrow? Not really. So a technical trader looks at the something looks at something which is very real. The one variable which is always deciding your M to M, your profit and loss, your everything about trading. That is the price. The price is reality. Okay. Everything else can be dreams, hopes, wishes, and fears, but the price right now is reality. Now, related to the price, because technical analysis is the study of price, related to the price, there are many variables that you see on a price chart. A lot of them are visual in nature, a lot of them are a little factual plus visual in nature, and most of them are creative in the process. Now it's very difficult for people to digest, first of all, that okay, every trade is not going to be right, every trade is not going to be something which is going to make me money. So how do I handle this? It is very difficult for people to digest that. How do I handle losses? Oh my god, you are an analyst, how can you be wrong? But you are an analyst, you told me. How could you be wrong? All these kind of things are people not be able to digest. These are little things which are the common thing about trading. You have to have the acceptance for these common things, that okay, some you win some, you lose some. Second thing, you need to have an acceptance of, okay, I don't watch the news. Will the news not give me information about how the markets will be? What do I do when I look at business news channels? Of course not. Of course, you're going to have a little idea about what is going on in the world. You're going to have the different idea of what is going around. But you are not going to base your trading only on that. Because something which is, say for example, you buy a stock which is falling. and that continues to fall. And then one fine day you see, oh, there is this news, probably something nice is going to happen over here. Doesn't mean that the market will react to that news in a way which is very immediate. Why? Because the markets don't move on balance sheets, they move on buying and selling. They don't move on news, they move on the reactions to the news. And if you can understand these reactions, you've made it. Simply because why do we focus so much on price? Because a trader is not someone जो एक के बदले एक का मान लेता है. A trader is not someone who would buy 1,000 rupees of stocks in lieu of his 1,000 rupees of capital. He will take leverage. He is here for that. He will take moves, call moves, trade moves that are immediate, that have a very low stop loss compared to the profits, a sizable stop loss compared to very big profits, and so on. So there are two things which a technical trader is always in the lookout for. Is look out for things that are consistent, things that are repetitive, things that come out of his conceptual understanding of the market and evolve into the variables the market is showing right now in this particular phase. And when these things match up, he takes the trades on the basis of two things. One is how he is going to see the probability of the trade. He is having a subjective understanding of the probability of the trade, number one. Number two, he is having a different understanding of how much risk is involved. So if I have a trade which has a very small stop loss, but its probability is only 20-30% roughly to be right, and it has a very small stop loss. That means if I lose 1 rupees, I will make 10 rupees. I'll probably leave that trade. I'm looking for probabilities of about 70% or more. If I have 70% or more probability trades, I'm going to be able to be comfortable to risk money rather than squandering my money. How many of you have experienced this? How many of you have seen yourself squandering a lot of money dhire dhire karke on small risk trades? You think that small risk but probability is zero. How many of you have done that? Raise your hands. Okay, a lot of messages and raised hands. So yes, if you've done that, if you have seen yourself doing that again and again, and you have wasted a lot of money, as some people are saying, again and again, you're not supposed to do that. There will be always a sort of, a balance. There will be a trade-off between the probability and the risk reward. So if you have a very good risk reward and a very high probability trade, you will have to find the creative understanding in yourself to be able to perceive that, judge that, and wait till those trades unfold. The more important thing about trading, about 70 to 80% of trading, is actually waiting. You wait for a good trade, you take a good trade, and then you wait for it to unfold in a certain way, and then you wait for the next good trade after you close this one, and so on. Let's look at what trading is broadly made up of. If we understand something by breaking it into parts, it becomes easier for us. Till now, I hope I am going simple. I'm not being too tough on anyone. I hope everyone is understanding. You're always welcome to ask questions in between. Let's just cut it open and see what the different parts of it are. Okay. So how do I go about? Let's take up one trade. So if I have a one trade, okay, I will look for a technical setup. I'm going to use technical analysis, which we're going to discuss a little more in depth as we go ahead. I'm going to I'm going to pick up technical analysis and the variables. I'm going to look at how I'm being able to perceive the price movement and the market phase currently. And then within that, have a step-by-step approach of analysis and come up with the trade setup. Now, a trade setup will be having a subjective understanding of how good the trade setup is. If I have a good subjective understanding of the good trade setup, obviously it increases with experience, but experience comes later. Someone asked me, a lot of people keep calling in new people. I love interacting with new people, and it's really nice that they come out with their very strong beliefs, and if they're not working, they seek out to change their beliefs. So I had one person calling me recently, and that person was like, someone told me that experience से आ जाता है, एक्सपीरियंस से ट्रेडिंग हो जाती है. थोड़ा थोड़ा अभी लॉस होगा, बट विद एक्सपीरियंस यू विल गेट बेटर एट इट, राइट? Yes, Amit ji, this session is getting recorded. So if you want to come back after 5 minutes, it's okay. But everyone, please pay attention and don't rely on the recording. Of course, it will be there, but right now, live is important. Okay. Secondly, so that person was like, some senior person told him or her that when you have experience, little, maybe you lose right now. With experience, you will make money. Don't worry. It's only a matter of time. Now, then I spoke about how the basis of the trading went. And what I got to know, I was like, oh my God, this is not trading. So, with markets, a lot of people can have different kinds of experience. It is not about you sitting and expecting yourself to make money because you have lost money for some time. Until and unless you pick yourself up and change the ways you're going to do things, that experience is not going to count. So, experience in a wrong way can be in fact crystallizing within you wrong trading habits which will make you consistently lose money. An experience grooved in the right way will have the right crystallization of trading habits. And if you are gaining that experience, obviously as the market phases pass by over time, your understanding, your reading, your maturity will grow and only grow. Am I clear to all of you? Right? Next step. Next step is money management. Now, a lot of people write about money management, talk about money management. Absolutely. But what is money management? On a very simple note, if I was to tell you, money management is simply taking care of either your stop loss or your target. So if you have a sort of, suppose you went long on the futures of one lot of a particular stock, and you say, I'm going long at 515 and 500 rupees is my stop loss. Fine. So 500 rupees your stop loss. And I'm looking for 560 rupees as my target. That is your target. So you have to manage that in terms of until and unless the either of the parts are hit, you are not going to close the trade. Now there is a middle ground in between. The middle ground is dynamism. Now you have to be disciplined, yes, but in the markets you also have to be flexible. So what I use point number one, which is my technical setup. Now my technical setup on I have to obviously go in details to be able to explain to you everything very clearly, but let's just put it in simple words. If my technical setup has a 70% probability, okay, has a 70% probability, or my technical setup has a 90% probability. Obviously, the 90% probability technical setup will have slightly higher positions than the setup with 70% probability. So, in my money management, what I'm going to do is I'm going to be a little vigilant with the 70% probability trade. And in the 90% probability trade, if I have gone for more positions, I will start scaling out and wait for the rest of the positions to run. With a 70% position, with the 70% probability, I will be a little more vigilant because I know if the probability is low, I can have multiple targets. I may not achieve the highest possible target I have understood, but I have to react to how the market is posing its direction. Or not just the direction, it is a lot more about direction, it is about the extent of the direction. It's not just about being able to say market is going up or market is going down. To what extent is it going up? To what extent is it going down? Okay. And all of it, I come to the third point now. I am able to manage with the help of the correct trading psychology. You cannot have a bad mental state and expect yourself to have a happy journey in the markets. Everything around you, Mr. Vivek, we'll come to that. I'll take up your question when we come to that. Yes. So psychology, yes. If you base yourself clearly on a certain kind of a trader's attitude, a certain kind of trader's mental state, Obviously involves, just like technical analysis and money management involves certain skills. Technical analysis, technical setup involve analytical skills. Money management always involve a certain business skill. Psychology involves, listen to this carefully, mental skills. Now this is something which will close the gap between you and your half-baked knowledge or half-baked trading with a good knowledge. So these are the different things which are involved. Now, on a broader perspective, what did I tell you? This one I told you about one trade, but over a broad perspective, I have to repeat this process over a number of trades, one after the other, after the other, after the other, because I know that all the trades I'm not going to hit everything absolutely right. I keep a buffer. If I have my analysis very strong, then most half the battle is won. I tell you, if the analysis is very strong, half the battle is won, because I know that in my money management, trades which are 70% probability may go beyond my expectation, but I may be out of the trade a little before, and trades with 90% probability also may hit a stop loss. So if my technical setups are very clear to me, then what happens is that I'm automatically tilted towards the probabilities. And obviously, if I have my psychology, I'm going to be able to go and play the ball smoothly. I'm coming to that, Mr. Herschel. Yes, I'm coming to that very soon. So now let's cut open what technical setup, what technical analysis is. Okay, so that this is one of the more factual things before coming to money management to psychology. Obviously, we need to take care of this. That's what we're here for today. Now, on the face, all of you who've been following me on Telegram and various other platforms, you have seen that I talk about technical trading, talk about trading psychology. I give out calls on my Telegram channel. So all of you know me from a perspective where I just show charts or I read charts. But this is what is behind it. This is the whole core basic yoke of it. Okay. So someone just asked a question about technical versus fundamental analysis. So this answers you. So technical analysis and fundamental analysis. What is technical analysis? What is fundamental analysis? Now, if I look at it in a broader picture, suppose I'm sitting outside a shopping mall and I have a lot of stores in front of me. I go inside, I take a look at each and every product. Suppose it's a medicine, then I look at the quality, look at the expiry date, look at what are the nutrients or what are the chemicals over here, what is it for, what is the power of the medicine, etc. etc. And then see what price it is at, and then go buy it. That is fundamental analysis. You look at the company, you look at the cash flow statements, you look at various other variables that are fundamental. You look at the economy, you look at the economic ideas. uh, just one second. So you look at the different variables which are related to fundamental analysis. Someone just asked me, what do I look at fundamental analysis? As a technical trader, I won't discuss deeply about it, but I'll just give you a few points for those who are sort of enthusiastic about it. Fundamental analysis is a very studied approach. First of all, it does not unfold in the short term, it unfolds in the very long run. Number two, it has to be something related to the balance sheets, the trend of the company's products, scale, the structural changes in the company, which is corporate finance, mergers and acquisitions. You have to also look at the basic economies it is driving its business in, the sectoral growth of the business it is in, the various cash flow statements, the liquidity, the debt, the management. These are the various ideas about fundamental analysis one is supposed to use for his understanding of how the value of the company is going to grow. Obviously, no analysis in the world. People think fundamental analysis आसान है. ऐसा कुछ नहीं है. मार्केट तो लॉन्ग टर्म में ऊपर ही जाएगा. गो लुक एट जापान, गो लुक एट इजिप्ट मार्केट. ऐसा कुछ भी नहीं है. एसआईपी करो, खुश रहो, मस्त रहो. I really respect everyone's opinion, but I don't believe in this. I believe if people are doing fundamental analysis, it's as tough a job than anything else. You have to go and visit everything about a company, everything, and go into the depths of the analysis find out what a subjective value would be. And any analysis in the world can be wrong. Any analysis in the world is never 100% right. You can go to technical analysis, you can go to fundamental analysis, you can go to CID, you can go to CBA. Any analysis anywhere in the world is never 100% accurate. So, for example, a Satyam or an Enron, a lot many examples, lot many examples, and then the market reacts in a very extreme way. Okay. Also, with fundamental analysis, what I don't like is personally, I never know how much I'm going to lose. So I'm always at the mercy of the market. But let's talk about technical analysis now. I'm sitting outside on the same mall, outside on the bench. All I do is I keep a very close eye on which store is getting the maximum footfall. If people are, yes, Harshilji, only for long term. If people are going in one store, in very thick crowds, very dense crowds are going to one store. Probably if I buy that jeans or buy that phone from there, I'm not going to be able to buy it at the same price 2 months later. So I know that the demand will increase that price. Now what I just said, demand will increase price. It kind of takes a hit on everyone. Demand will increase price. Yes, absolutely. In markets, in your social growing up, your understanding of society has taught you that if something goes down, uska demand बढ़ेगा. तो कुछ नीचे जा रहा है तो उसको खरीदो. और something goes up, उसका demand घटेगा. तो ऊपर जा रहा है तो उसको बेचो. No, 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 no. That is why technical analysis is about following the trend. Because in markets, when something goes up, its demand increases. Something goes down, its demand decreases. Please understand that. So fundamental analysis and technical analysis have a very wide difference. Fundamental analysis is used for very long term. Technical analysis can be used for short term, can be used for intraday, can be used for medium term, can be used for long term. Technical analysis is fractal in nature. The essence of technical analysis is that a technical setup will tell me how much I'm going to lose before I get into a trade, and how much am I going to potentially win before I'm going to get into a trade. Therefore, I can manage my leverage beforehand. Technical analysis can keep me liquid because if I'm an intraday trader, every day after market closing hours, I'm completely liquid. Tomorrow, what happens? I don't care. If the market opens 500 points down, I don't care if I'm liquid. So that is what technical analysis is about. Fundamental analysis is always about the long term. Now let me tell you, yes, Harshalji, have some patience. I'll share a lot of things. Okay, we're going to go very deep. Don't worry. Yeah. So this is the major disadvantage of fundamental analysis. You know, we call it the reality gap. As I discussed earlier, अगर बारिश अच्छी होने वाली है, I'm not being able to say if the market is going to open 80 points up tomorrow or 180 points up tomorrow. Or maybe even if the monsoon news is very good, markets may be down tomorrow also. So the fundamental analysis is not based on real buying and selling. Markets prices don't move like there's no magic wand. कि भाई आज there's a good news. Let's raise that magic wand with the good news and the price goes up. Nothing like that. Prices do go up only because of buying, they go down because of selling. Now obviously when one is buying, someone is selling, but in a certain trend which is going up, the buyers have more conviction, they are overwhelming the sellers, sellers. Suppose out of a lot of few people, everyone is selling, and then the bigger hands are buying, they can sort of engulf you completely and go beyond the price you have offered. So that is what the conviction of the buyers and conviction of the sellers. So fundamental analysis will always cause this reality gap. So all those people, you can check out a lot of other videos of mine on YouTube. You will find a lot of examples I talk about where there is a day, I have encircled that day, that there was a good news this day and the high is made. And the high is made for the next about 8 months. There is a bad news this day and the low is made. And after that, the price goes up. So the reaction, the discussion to the news really have got not a lot of bearing. And even people who are driven fundamentally, even institutes or larger hands, if I may say, even investors who are intelligent, maybe small investors who are driven fundamentally, are there on the long term. They themselves, most of the time, are not reacting impulsively on news. The knee-jerk reactions which are created by the more small time frame people who are looking at the news and or looking and getting influenced by the price and the news at the same time, or they're participating in the news, maybe in the same direction, maybe in the opposite direction, irrespective of what the basis of news and the connection with the price is. The news can not tell me clearly the direction. It cannot tell me the extent of the move. If I don't know these two things, how am I going to trade? It can give me a lot of hope. It can give me a lot of fear, both of which are very unhealthy. So trading and the important elements of trading really don't go hand in hand with fundamental analysis. So if someone is asking, are news important for us? I'll tell you how I practice and how I vouch for it. Of course, you keep an eye on what is going out in the world. If there's a major news event, sometimes in those events, you get important technical triggers, which are price movement triggers. Number one. Number two, you can get a very good risk reward. So for example, somebody who had deciphered that on the budget day, it is going to be a very good opportunity if we get a high and we sell. Or irrespective of the budget day, if as a technical analyst I could look and say that, which I did, but I'm just telling you for a broader perspective, that on the budget day you have, say, certain signals which are already pointing towards a downward direction, right? Certain signal which are going to point towards a downward direction. So on such a day, what is going to happen is you're going to see that that pullback which happened, that pullback which happened. Am I audible, everyone? Okay, that pullback which happened is going to be a very good opportunity for people to sell with a good risk reward. Am I clear? Are you understanding what I'm saying? And that is one of the aspects of news. The other aspect is can create new price triggers. So what I do is I step back a little bit. If I see something very, very clearly, I'm in a trade. If I don't see anything clearly, I step back a little bit and wait for the event to get over. Wait for the event to give me new triggers and so on. It is just a little bit of trading wisdom that kicks in, because in a lot of cases when news are involved, there are a lot of heavy volumes, there are a lot of very heavy participation which is involved. There can be whipsaws in the movement, there can be whipsaws in the movement, and so on and so forth. Now, is my camera visible? Uh, just confirm me. Little, I think camera got frozen. Okay. Okay, no problem. But okay, my screen and my sound is okay, right? Camera got frozen for some reason. Okay, perfect. Perfect. No problem. No problem. So this is the whole idea. The whole idea is that we okay, thank you so much. Thank you so much. Just someone had messaged, so I kind of asked you. Uh, so disadvantages of fundamental analysis to trading is this. Now, of course, fundamental analysis is very important in the long run. If we are looking at fundamental triggers, it can give us a lot of conviction in the very, very long run. But don't take that long run to be a 6 month period. Most people make that mistake. A lot of people come and talk about, oh, yeah, fundamentals, I got to know everything. Not really. A long term means really 5 to 10 years. It cannot be less than that. And I'm not even talking, depends on the stock and depends on the situation of the stocks also. Some are distressed investments, some are long term growth investments, there's some are defensive sectors. But I'm trying to talk about an idea of long term which is very long term. So if you're wanting to see yourself pulling out money and putting it in a bank account in the market in the next 6 months, forget about investing. That is not investing, that is also trading. Okay, if you see people coming out and telling you, if you are a long-term investor, invest in this stocks and see what happens in the next 6 months, it's not really an investment, it is a trade. Because after the next 6 months, if you don't have a correct market phase, where will you plow back that money? And if you plow back that money in the wrong places, you don't even have the cash in hand, and you maybe because you're in the wrong spaces have this thing, have a loss. If Nifty has given 20-25% year on year return, for example, say I take up some year, maybe 5 years later, I say this is the percentage return of Nifty. Right now, Nifty is not very low. It is at a very good, nice levels compared to what we had in 2011. But I know people who've come to me even recently. The market to itna upar chala gaya and my portfolios are going down. Market is giving so much return, my portfolio is 60% down, 70% down. What to say? You have to be in the right spaces. If you are in the right spaces, and if you translate that entire thing which I just said into a little more short term, say the market has been going down recently, but most of my trades on the long side actually paid off. Why? Because at the middle I was in the right spaces. When I was short, obviously I was in the spaces which were going down along with the markets. So that is where the trend comes in. So for trading, always look for technical analysis. That is the first priority. Now let's just clear certain misconceptions about trading and technical analysis. Number one, what you see on the television is compulsive analysis. Please understand. If you are trading every day with the same equation with the markets, if you're looking for each and every day to give you a same pattern of movement, a same style of movement, it is not going to happen. It is not you can't decipher a clear movement every morning at 9:15. So on television, if somebody has to come, with all due respect, someone has to give out an analysis. To some extent, it may be just analysis, it may not be tradable. Therefore, if that is compulsive analysis, I may not be seeing something very clearly on the chart, but I may be seeing something half baked. But since I have to come and be compulsive every day at that particular time, it will be compulsive. And I'm simply saying this because of my understanding of the financial industry and the business news media industry through my different experiences. Now, second point, never does one technical tool work in isolation. A lot of people come and tell me, sir, this is the ultimate thing. I will trade only with GAN. I'm like, okay. So, sir, but I'm telling you this worked out very well in that trade. I will use trading it every day. Like, how will you trade something every day which shows you a signal in every 6 months? How will you trade something which shows you clear signals after 6 months by using it every day? Someone says, I will, sir, only use overbought, oversold extreme signals. Like, okay, so what else are you going to use? No, sir, I'm going to use just this. Like, what time frame? Well, I'm going to use in the weekly time frame. Okay, so how can you use something every day which is going to give you a signal on probably a few occasions, maybe once a month, or maybe in certain market phases four times a month, and certain market phases 0 times in 4 months? How are we going to use that? So no technical tool works in isolation. It is always about mixing a technical tool. Now, what do I mean by a technical tool? Please understand. A technical tool is something which gives me an edge. An edge matlab kya? An edge matlab telling me something about the probability of movement in one direction over the movement in the other direction. So if I have a particular technical tool giving me a very strong signal to buy, a very strong signal to buy, and there are other three technical tools that I'm using which are giving me a very strong signal to sell. From one technical tool point of view, I have the edge on the buy side, but on the other, if it is not matching up, I will avoid that trade. I will mix up my technical tools together and see if on a combined level, if they are coming and crossing and overlapping with each other. If they're not overlapping and giving me the edge together, then my system is not giving me an edge. So a technical setup or a technical system is made up of various technical tools, and each one gives me its own edge. At a given point of time, a 90% or 80% on a subjective probability basis, I'm saying 80%, 90% trade is based on at least 4 or 5 technical tools together giving me a signal. Point number 3, any analysis is about probability and never certainty. That's what. So, for example, I see a candlestick signal and I say, okay, this is showing me sell. So, let me sell. And then it doesn't work out in your direction. And I've had many sleepless nights like that. I used to think, what am I doing with my life? I would look at one technical tool, look at it very nicely, go and back test it also, but in the end, not get profitable. I would ask myself what is going on. And then I learned that there is a filter. I need to use one technical tool and filter it with the other technical tool, and then filter it with another technical tool. And when I can get a lot of filters, I will be left with something which is, cream trades, only cream trades, right? And also, I learned that all analysis is always about probabilities and never certainties. Now, this sounds a little counterintuitive. सर प्रोबेबिलिटी के बेसिस में तो पैसे क्यों लगाए, कैसे लगाए, डर लगता है. True. Now this is what I spoke about trading psychology, the mental skills which require in trading psychology. That if I see myself trading in the best flow, I always see myself taking a trade with an unquenchable belief that overall, that over a series of trades, I'm profitable. Therefore, the certainty is the is never there, but the certainty is never there. It is always about probability. But I act in a way which seems as if the trade is very, very certain, or I talk about it in a way, or I call it in a way which seems as if it is very, very certain. There is underlying probability. So that is the mental skill you have to balance, right? Very good question, Mr. Harshal. Again, coming up with a very nice question. He says, "Do you use a screener for your setup?" Very, very good question. I have something in details about it. We'll come to that. Number 4, biased analysis is not analysis. Okay, so a lot of people have a bias. Most of the time, it is when they're already in a trade and they look for and the trade is not working out, or if it was working out, it stopped working out, and then they look for the evidences which are there, which are showing them any kind of movement in their direction. So someone went long and he was getting about 6 to 7% in that stock. It was a short-term trade and it was in futures. And the guy saw that coming. He didn't book profits. He never had a judgment with the setup of the trade, and then he went down. So, and this happens a little rarely, but I got this sudden mail. I was like, okay, this mail came in, and he's showing me two charts. One is before he took the trade, and one is now. So in between, the price has already gone up, and now is almost at his cost or below his cost. And he's looking for all the evidence and showing me some lines and this and that. I do respect each one's effort, but I could understand that somewhere or the other there was a cloud. There was a cloud. Okay, this happened about 2 months back. This there was a clouding which happened. His analysis was fogged with his hopes, wishes, and fears, and that is when bias happens. That is what I mean by bias analysis. You can't have biased analysis. You can only have clear analysis. Only then will it yield. Number 5, technical patterns are similar, they are not the same. This is a very important point. This will iterate a lot of things to all of you. Understand this. And this will also iterate, I'll pick up the question someone asked. So each and every person who has ever asked question, maybe someone in the first 15 minutes, maybe someone now, each one will be answered, don't worry. If you want to ask questions, feel free. So someone asked, do you use any screen of your setup? Okay, I'll come to that also within this point number 5. So this says that technical patterns are similar, they're not the same. Now listen to this. History doesn't repeat, it rhymes. History doesn't repeat, it rhymes. Yes, Mr. Ashok, you will. History doesn't repeat, it rhymes. Okay. So when history of prices have shown us certain pockets of similar behavior, not the exact same behavior. So basically, if I take up a technical analysis book or if I Google something, that is why I say, people think they can Google and search anything. So learning technical analysis is something that can make money in the markets for very, very long period of your life. It can make you financially free. That is not as easy as looking for a menu in Zomato, right? So people who come to me say that हमने गूगल पे ये पैटर्न देखा है और वो मैच नहीं हो रहा है. I'm not able to see this. I saw this head and shoulder pattern and they say okay, head and shoulder pattern है. So I'm like, okay, you take these 5. Which one do you think is a head and shoulder pattern? Everywhere they can see a head and shoulder pattern, and maybe out of 5, all of 5 are wrong. What I'm trying to say is that your recognition of a particular technical concept has first of all have to have a lot of practice, examples and alignment in your learning with what is similar, what are the nitty-gritties. Every pattern has 4 to 5, minimum 4 to 5 properties. If those 4 to 5 properties, all of them will not be falling in every right pattern of that kind. There will be out of 10 head and shoulders which are working out, I can show you those property being very well aligned inside 2 or 3 one, and then there will be one where only 4 of those properties are aligned, and so on. So each and everything is similar for this reason. It is not same. It is not like इसके ऊपर superimpose कर दिया, stencil रख दिया तो same आएगा. Never that. So understanding that is very, very important. Okay, when we have when we have one second. Yes. So when we have seen that many authors have written about it, the first authors, the first sort of discoverers spoke about it. They did not see that every time the exact same thing happening. They also saw something which was similar. And if you are having enough practice to see a set of similar things across different tools and combining them, placing analysis, then understanding the subjective end of a trade, you are doing the right trading and executing it, of course, doing the right trade. So all this is a step-by-step process. And if you want to understand the similar behavior of price movement, you will have to practice, you will have to learn with examples, you will have to uh, broaden the horizons of your learning. Broadening the horizons of your learning is the first step to success, because even if I make 20 lakh rupees in options in this quarter and I decide it and I make it, what will happen in the next quarter? I will want another 20 lakh rupees, if not more. So if I stop learning, I will stop earning. And if you have to earn money in the markets, you have to learn. There is no other option. You can't be loose with money. People who come to markets, first of all, the problem is they think that I have surplus money, so I will play in the markets. Then they think they've come to a casino. Then they lose money, they want to go look into technical analysis, which does nothing to them, but give them biases in a more intellectual manner. How many of you are resonating with what I'm saying? Raise your hands. You're not supposed to get biases in an intellectual manner. It's good that you have seen some evidences. That is what you are here for. That is why you are here. That is why you have that little flickering hope, right? I want to fan that spark and make it a flame. Okay? It is possible. It is right there, right in front of you. You just need the right eyes to see it. You just need practice. You just need proper learning. You need to structure yourself. in a process before taking a trade. Give it 1 or 2 months of practice and see how the magic can be created. You have to wait for the market phases. You have to go through some market phases with just maybe simply watching the markets. You have to not take 10 trades if you're getting, take two. You have to go slow. You have to go fast when needed. You have to pace yourself. You have to focus on psychology. That is the end of that is, and there's never ending game of learning, because after crossing one phase you will have another phase. So there was a time when I used to trade about, say, suppose it's a like a 1,000 2,000 rupee stock. The maximum I would trade is 100 or 50 shares in intraday. That time, that phase, I had different learnings to absorb, and over time, the sort of position size has grown. Every time I have some learning to absorb. It's like playing a video game. You play level number one. You first grab all the bonuses and the fruits and whatever they are in the game, and then you go to level number two. You also have a one up. Okay. So if you make major mistakes, then that one up saves you. That saves you. So you have to focus it on like that level. So these were the misconceptions clear, right? Now understand this. Why? What is the basis of technical analysis? We are getting deeper now. The basis of technical analysis is that the mass psychology, which are the masses, which are people like me and you, okay? We all have a certain nature, okay? And that inherent human nature, of course, it's not healthy for trading, but the inherent human nature makes you want to sort of believe in something with either an extreme of exuberance, where you're acting on something which is visible. So most people who are going long, who are not technically doing things, are doing things emotionally. They end up going long at the highs. Sometimes they see another high after they go long. They feel very happy, but that's the last wave many times. But exuberance, the state of mind where there is no perception of risk. यार मार्केट तो नीचे जा ही नहीं सकता, ऊपर ही जाना है. That is where most people sort of get trapped on the long side. On the short side, mostly it is about a panic, a steep move, or a vacuum which is created, and sort of, you can say, what do you call it? You create a certain kind of fear, okay, which is not exuberance, which is not extreme fear, but the fear that this is going to last forever. This is what I'm saying, a spike move. Now these spike moves, again, some things which are visible. I'm not saying that you should not go long or you should not go short over here. I'm just saying these spike moves which you see, these are also an extension of the human personality, because when everybody is doing everything exactly, thinking, feeling the same thing at the same time, and then acting on it, the reaction of the markets are always similar, because a mass tide, a huge psychological wave of the masses is coming together, and that is doing the same thing at the same time. So you go along over here. By the time you're here, now this is looking at technical analysis from one point of view. That is a little more contrarian point of view. Then there's a point of view where looking at going with the trend. So we'll come to both of this. So one point is here that, okay, fine, you go along over here, and then you are distributed a lot of stocks, and then the price goes and makes a small low, and by the time this low is made, you sell and the larger hands buy. Okay, when I mean you, don't take it personally, I mean the emotional trader. Okay, and then it goes back up at the next high. Again, it is emotional traders who are going long, or emotional traders who went short over here, who are cutting their position, and again, because of the fear, the larger hands get to buy at the lower levels. So they scale out where the emotional traders scale in, and so on. And that is how trends always exude. That is how trends reverse also. And you see all this happening at a different time frame. All of you here, I'm sure, are experienced with trading enough to understand that if you lose your head in the market one day, and if you see, okay, at every tick I'm buying, or niche gaya I'm selling, upar gaya I'm buying, you're doing that kind of thing someday, for example. That is how the intraday traders are creating an exuberance or creating a downward movement or creating an extreme in price movement. That extreme in price movement is because of the emotions. Now, obviously, the traders who are short term, very intraday, when they act emotionally, they are creating the short term intraday spikes on both the sides, the extreme movements on both the sides. The traders who are short term or medium term, they are creating intermediate trends, they're creating intermediate highs and lows, they're creating extreme movements on a little slightly more higher time frame, higher degree of time frame. And then there are long term entries and exits which are emotional, which again people would exit at a major low. It's not because they're exiting at a low, it is because they're exiting that the low is. That contrarian analysis, that contrarian aspect to technical analysis is always there. On the other hand, when we look at participation, we look at trends, we also say that mass participation, irrespective of who is the stronger hand, who is the weaker hand, mass participation is showing us the conviction of the bears or the bulls on whatever direction the market is going. So, technical analysis is a psychological extension of the trend which is going on. So, the trend following, which is due to the people acting in the same way and staying put on one direction in the same way. And also the hiccups in the corrections, which are a lot of people going for exuberance or extreme fear, creating extensions in different time frames. And technical analysis, as you all know, is there can be a weekly chart, there can be a daily chart, there can be an hourly or minute chart also, is fractal, is always on different time frames, right? One more thing to understand about technical analysis is that markets do not move in squares and boxes, they move in waves and trends. They move in waves and trends. How many of you had a problem with this at any event? Raise your hands if you had a problem with this. सबको लगता था कि सिर्फ पैटर्न ही होते हैं. But even patterns are not patterns. If you look at them carefully, they are not squares and boxes. How many of you had this realization? Raise your hands. उसने तो ये level बोला था. A lot of people are raising that. Oh my god. Yeah, this happens commonly. Misconception. निफ्टी का इधर सपोर्ट है, देखना क्या होता है. This is the range. Is a range like a square, like a proper rectangle box every time? No, not really. Maybe on subjective level, someone said range, and then you're trying to look at it, or you're trying to force something, define something which is not visible on the chart as yet. That is also bias trading, as we discussed earlier. So markets don't move in squares and boxes, they move. So the crests and the troughs are not basically, you know, in a tight range all the time, or most of the time, or half the time. They are moving in different ways, in unique ways in every day. Someone asked a question about what about system trading. Someone asked also about the screen part. Now look at this. If I use a screener for my trading, okay, a lot of people vouch for, let's look at the top gainers, top losers. Keep an eye. Let things come in the limelight. If you've already done your homework, you will be in the top gainer, or you will be short on the top loser. Keep an eye. See the stocks in the limelight. No problem. But take your judgment on the basis of what you can see technically. There can be days and days and days in the market. I'm seeing the top gainers, top losers, and then that is not giving me anything. That's not a signal. That's not a screener. Okay. Then I can see for days and days, every day I can see something interesting because of the top gainers and top losers. It's a very generalistic thing. Now, if somebody is asking for a screener, okay, I give you this concept. Let me look at this and this particular concept at this zone in the hourly chart. Okay, I put the screener, I run through the screener, and I see that out of the 500 stocks I ran through the screener, 5 stocks are showing me that. Perfect. I go in, I look for other things, and then I take the trade. Now that kind of screener you can make out of your own creativity. According to the trading style and trading setup you like to want to and understand trading. You can use that method to be able to just segregate a few stocks, maybe even during the day. But if I give you a particular screener, understand what is happening, understanding what equation I'm coming over here. Market moves in different ways and different directions and different extents of different directions every day. If market moves different ways every day, how can you use the same formula to judge what is going to happen every day? I can't. It's not that easy. I'm not saying it's difficult, but this is not the way. This is not the way, right? So you can't use the same formula every day. Therefore, if you have to use a screener, go for your creative aspect of it. I can give you a lot of examples. Like for example, a student came to me. He's a very good student, learned a lot, amazing at what he does, and always looks to learn more, keeps asking questions, and even it's been more than 6 months he's done the course with me. It's like he's asking questions, and it's really, I really cherish such students who ask rich questions, always bring up new things. And I have also discovered a lot of things in my journey. It's not that I've boiled down to all these clear things so easily. I have also had my way around the maze. And obviously if some of you are, that only shows that you're trying to get to some place. So in the process what happened is that he came up with a very creative idea that I'm going to look for, let's call it variable A and variable B. If these two are happening anytime, then I'm going to screen those stocks. And he screened those stocks. That gave him something, but nothing too substantial, I would say. And he understands that. He understands that, okay, this is the market phase. I'm not going to get anything out of the screener. Then the extreme of the market phase where he's going to get comes. Say for example a low volatility phase. So he has a volatility measure and then high volatility phase. So during the low volatility phase only he's running the screener. Now what he's doing, that half the days he's not running, half the days he's running the screener, and those two variables, if they're clicking, not clicking, not clicking. If he gets two trades which are somewhat ready to move, ready to budge, fine. If he doesn't get it, he puts them in the radar. Maybe tomorrow he gets the trade out of the stock, because that does not have to unfold intraday only, that kind of analysis also hard work. So screener is not something which will, oh my god, this is falling right into my hands like this. Not really. What is going to happen, a screener will be able to segregate you analytically, not trade wise, because you also don't know if what the trade which is going to unfold will unfold that day or it will unfold 7 days later. And most importantly, other variables are also important. So that way. So in this entire confusion of when to buy, when to sell, let's come directly to uh, the technical concepts and categorize them. What the technical concepts are. So please tell me if you have till now whatever we have done. If you have any questions, please ask the questions. Okay. Till now whatever we have done, please ask the questions if you feel like. Just give me half a minute break. I'll be back. You ask the questions. Okay, just give me half a minute break. Okay, I'll take up each and every question and then we'll move ahead. So I'll take up the questions now. So question number one: what is the best candlesticks time frame to use? 10 minutes, 15 minutes, 30 minutes for intraday traders. Number two: the top five indicators or tools or filters of intraday trading. Good question. Next question is: do you use any indicator? Sorry, you lost your voice. No, I have my voice. You are. Then we have a big question. 1 second. Yes. When we backtest some trades on signals giving execution, they are giving more positive result, but in real market the ratio is very different, right? So Ashok ji, very good question. You have to look at how it is tradable. I'll come to all these questions. Oh, no, no, Srikanji, in fact, you're asking very valid question. It will help all of you to learn something new. Don't worry, all your questions are right. So the first question I'm coming to, which time frame of candlestick do I use? First of all, we'll understand candlestick a little bit. I have candlesticks today. So that time, obviously, it'll get more clear. So let me tell you one thing. Yes, with candlestick, multiple time frames help. Now, for example, on the weekly candles, okay? Always keep the weekly candles very strongly here. You will not realize what I'm saying in 2 days, but in a few weeks you will realize what I'm saying. That weekly candles, if you keep upfront, what happens is it helps you. If there's something very, very, very strongly poised on weekly candles, very strongly poised, that time you tilt yourself or sort of an analytical bias towards that direction. That suppose, and we have had, in fact, in the previous batch, and we are looking at weekly candles, came to candlesticks, and during the time we were doing candlesticks, within the batch itself we had like two stocks in weekly candles which gave about more than 10% movement in the next few weeks. So this kind of thing is very common generally while teaching, but nonetheless, uh, Japanese candlesticks, always weekly candles first, then come to daily, then come to hourly. Now when you come to the 15 minute, 10 minute, hourly, there's a question like that, sir, best कौन सा है? कुछ भी best नहीं है. समझिए what is the essence behind it. Okay, once you come from the higher to the lower, you are grabbing a certain bias that okay, fine, this trend is like that, this is an uptrend, so I'm going to look for trades on the uptrend. Some candlesticks patterns are invalid. Why they're invalid? Because they are anyway against the trend of the larger time frame. So you'll have to find a method to see it. I'll give you an example. Okay, let me give you just a random example right away. Everyone can see my screen, right? So come on, name any stock, any particular stock. Anyone, one stock, come on. Okay, बहुत हो गए, बहुत हो गए. चलो, Reliance ले ही लेते हैं. ठीक है. And some other questions are also there. Everything I'm coming to. Okay. New question. So Reliance liya. Okay. Now, for example, okay, when we do candlesticks, obviously it'll come back again. For example, over here, this candlestick which I'm able to see, this candlestick, okay, this candlestick. This is not a doji, this is not a shooting star, but I'm just telling you, it is more of a shooting star. Exactly, the essence is the very high wick. Okay, this wick is very long. Okay, now I don't look at just that. I combine with a basic understanding of a subjective trend line which joins at least 3 points. See, joining two lines is geometry, joining 3 points is technical analysis, because any two lines, if they join them, they will become a straight line. So a lot of people have these blog posts and all that, just 2 points joining. Look for at least three joining points, then you have a structure. Okay, I mix that up with my understanding of the daily candlestick chart. So first of all, two things I've got over here. Okay, now my bias is on the downside. Now the first trade I say in the morning is a shooting star. Okay, So my bias is there. This is the 15-minute chart. I'm converting to the hourly. Okay, hourly. My bias on the hourly chart is on the downside. Now, how will I see what is happening over here to be able to tell you what is going on? So 15 मिनट में आ गया, ठीक है, ट्रेंड लाइन वहां ड्रॉ की थी, right? Now I see that there is a continuing evening star over here, and there in this zone there is a high wick candle. So now the 15-minute chart is saying something. Now just because the time frame I'm specifically using 15 minute, if I use instead of 15 minute, let me make it randomly 12 minute. Okay, randomly I made it 12 minute. It will not make much of a difference as far as the subjective analysis is concerned. In fact, in some cases, ad hoc numbers, say I use uh, like 17 minutes, okay, some ad hoc number can show me a more clear signal, but that is not my basis of trading. My understanding is that if I'm using a particular time frame of signal, then my subjective things should come together. So if you understanding that part of technical analysis, that part of candlesticks, any time frame you set for yourself is good, but go step by step. First look at daily, weekly, then look at daily, then look at hourly. Now, for example, the daily trend is down. Now the daily trend is down. I know from this candle, from this candle. The next day it goes down again. How do I trade it? So next day over here it has opened. It has gapped up and opened, and it has come down. Now this particular candle is called a bearish belt hold line, and the upper part of the stomach of this candle, which is the upper part of the zone of this candle, has given me a particular congestion in price movement from which it breaks down. So I sell over here. I sell over here. Okay, even if I sell at this level where my mouse is right now, it is a very good sell, and we see it unfolding in that way during the day, right? And so on and so forth. I hope your question is answered clearly. So I'll quickly move to the next question so I can take in good answers to all the questions, right? Now, next question you're asking is the top 5 indicators or tools for filters for intraday trading. That will be covered very shortly. So let's skip that question for now. Uh, Third is how to find zero point 0.5 to 1 point stop loss, how to move risk reward to 1 is to 4 or 1 is to 6, how to find support resistance levels. Okay, okay. Then you have how to trade in choppy markets. Then you have trade, share your trading script for backtest. Okay. No, I don't screen. No, I use subjective understanding and technical analysis. Just what I told you in very simple words. Obviously, there were quite a few other variables that may have been involved in different trades, even in this one, so that it doesn't become difficult. I didn't explain in that details, but this simplicity which was showing over here is also good enough for trading. But I'm not saying that this is the ultimate thing. Okay, this is one market phase, one particular stock, one particular scenario. There are different scenarios. Okay. Okay, so high beta, someone is asking a high beta question. Very good. I'll come to that. So I think I'll kind of couple in 2 3 questions together. One, someone asked how to trade the choppy markets. Someone asked how to find risk rewards, which are like 1 is to 6. And someone asked particularly that what do I do? How do I pick up stocks? Do I pick up high beta or low beta? Now, let me tell you this. Uh, you have to see it like this. Markets, okay, just don't go up and down. They have an extension of going up and down. The extent to which goes ups and down has a play in our analysis and trading. Then you have volatility, which is mean reverting. So the volatility goes up, goes down. What do I mean by volatility? Standard deviation. Volatility, generally people say market niche jaya to what it is. That is not volatility. Volatility is one-sided movement. It can be on either direction. If volatility is one-sided movement, there will be times where the prices will become congestion. In a congestion they'll come about, and they will become very narrow, they will become very choppy, there will be confusion between the buyers and the sellers, and you don't have to identify those levels. The levels will be like that. You don't have to, I mean, not levels, you don't have to identify those market phases. These market phases will be a part of either a existing trade which you have. So in that existing trade which you have, you stick to the previous trading plan, or these will be a part of place from where you will get a trading signal. So for example, the area in Reliance which I showed, okay, from where if I went short, it would have been a good trade. Okay, I'm coming to that, Harshulji. Indicators and all, I'm coming. Okay, so uh, I'm coming to this good trade. If I'm shorting at that point, if I'm shorting and showing me a trade unfolding in the right way. Now, someone who asked about the congestion part. Now that congestion which was going on at that time, I'm not taking a technical trade because there is no technical trade setup. It is a sideways conjunction. And even if I had to take a trade, it would have been on the short side. So eventually it would unfold on my direction only. Right? And in case it's a stop loss, in some cases I also have a stop loss. It's not a big deal. But it is, most trades are very nice. So most trades are very nice when you look and analyze them very nice. They will be very nice. I'm telling you this. That is a general thing about technical analysis. Now coming to the risk reward. uh, Being with the trend is important, all of you. Most people try to go against the trend. If you are with the trend, the stronger moves, the faster moves, the bigger moves will always be in the direction of the trend. That is why we talk about being with the trend. Okay. Number three, about risk reward. Risk reward is the distance between your entry and the stop loss. It is not the distance between your entry and the last intermediate low. Now, or it is not the distance between where you entered and immediately the price had to move up, or where you shorted and immediately the price had to move out. It's not like that. So risk reward will come to you when one second. Yes. So a risk reward will be coming to you automatically when you are doing the right analysis, depending on two things. One is what is the volatility of the market. Number one. So if the volatility of the market is expected to extend, is expected to expand, then the ongoing move after you entering a trade will be expanded move. Okay. Number two, what are the technical setup you are using? What is the different market phase you are in? So general basis may look for risk reward at least 1 is to 3, or at least to least 1 is to 2. Number one. Number three is how the market rewards your risk reward after you've taken a trade. So if I plan a trade with a risk reward of 1 is to 10, okay, so I risk 10 rupees, I am going to get 100 rupees in that trade. But the trade goes in my favor to about 25 rupees and it shows all the signs of coming down. At that time, if I exit, I still get a risk of reward of 1 is to 2.5. So the market has offered that kind of risk reward. Some trades surprise me also when they are like, I expect this to be a okay, decent, okay type trade, but it really extends its move. So that can be some sort of risk reward, which is showed to you after the markets. But from your planning point of view, have at least 1 is to 3 risk reward. So when you plan, you will obviously not get. I'm coming to what is beta, Vivekji. When I'm going to plan, I'm not going to always get exactly how the market will reward my my trade. But I'm going to be able to decipher from before by combining my tools. So, for example, obviously, big risk reward will happen hand in hand with big market movements. Let me just give you a small example. Okay, so this is a little takeaway from this webinar, if you can. Uh, in according to Elliott wave theory, which is a very important uh, tool I use. It is analytical tool, Elliott wave theory. Now, please understand my basis of trading is not just Elliott. It is a mix of a lot of other things also. So yes, Elliott being something which is prominently shown, there is something called a ABC correction, which is a wave correction making two lower lows. Okay, two lower lows. This is a ABC correction, and this is a ABC correction which you see currently, which I'm showing you over here. This ABC correction is a correction on the downside, therefore the overall trend is up. Okay, this is the correction on the downside, the overall trend is up. Okay, Now, if this ABC correction is coming on, and I'm going to talk more about this waves later, but ABC correction is suppose coming on, and then the future moves are poised in a certain direction. There are a lot of wave structure counts, confirmations which are to be done. So don't just fall for it that this is how it is. But I'm just showing you that ABC over there, and then I'm showing you ABC over here. Okay. And few days later, we had a Gujarat elections. This is the ABC. Okay. This low, this low. So this is the lowest low point. So wave A, B or C ka low ye hai. Okay. After that, there was some move over here. So there were certain candlestick patterns, there were certain uh, classical patterns, and there were certain volume based patterns which were there. When all this was there with me, my bias was कि ये low ban gaya, ABC has happened, my bias automatically tilted towards the higher side. Over here also my bias was over the higher side. Now if you look at the volumes, volume is also one of the subjective indicators since volume is not related to directly to price. All indicators are second order derivative of price, so most of them are useless, but volumes are more useful at certain phases because they are independent of the price. Okay, anyway, so the volume cemented this move, and here I was seeing a certain diamond pattern which was there, and we could have opened the hourly charts and all, but if I spend too much time on one example it will take away all the time. Okay, so I was teaching this in fact to students, and we had a breakout over here, and from this breakout the particular wave counts and the particular possible wave of extension which was from this breakout, the risk was hardly anything. In fact, the price moved in the direction of the trend immediately, and if I had to have a subjective stop loss it was here. So this was the risk, and the reward was to just follow the trend, and we were looking for at least three extensions which came around over here, but the price actually went till here. So even the plan would have come around at a very good risk to reward ratio. So you can imagine this is the reward and this is the size of the risk. So this is the plan, and then this is how the market reacts. So if you see the uh, markets are still going without any evidences of falling, you can stay long with some positions at least. So these are the potential risk reward. Now the market phase has to offer me that sort of trade. I can't say that every trade will be a 1:6 risk reward every morning 9:15, right? I hope all of you understood and borrowed something from this example. Raise your hands please. Or is it becoming a bit too difficult for everyone? Everyone has understood this example. So I came from that ABC pattern, then I came to the pattern with the volumes, then I came to the candles, then I came to the simple classic patterns, then I came to the hourly charts, and then I came to the entry point. So if all the things, and I'm not even going to the weekly charts right now, but if all the things filter after filter after filter are showing me bullishness, then I'm going to come as close to a monster move. And I can show you various examples like this of very big moves I've been able to decipher or trade. Okay, now, okay, how many of you are not believing in what I said? How many of you have not understood only how, don't resonate, don't believe that ये होता है, ये तो अभी हो रहा है इसलिए बता रहा है, ठीक है? कैसा ऐसे भी कोई होंगे, हाथ उठा दीजिए प्लीज. चलो अच्छा है, कोई कोई नहीं है. थैंक यू. तो एक और एग्जांपल दे देता हूँ ताकि जो ऐसा मन में किसी के होगा भी, शर्मा रहे बोलने के लिए, तो ये देखिए, दिस इज ऑनगोइंग डाउनवर्ड ट्रेंड इन लूपिन. ओके, डाउनवर्ड ट्रेंड इन लूपिन. मेकिंग द वीकली चार्ट फॉर इजीनेस सेक. कितना बड़ा ट्रेंड आ गया. दिस इज a ABC on the upward direction, which is a three wave corrective move. Corrective moves have three waves, and then you see the extent of the fall. It's much down than this also. So you see the bias is, if I had a short bias because of my Elliott analysis, I would never get into the false moves which a lot of people got into. And believe me, this was a day which was made a high. It had got a good result or something, and then it swiped back inside. So and after that, that high is made for years, for not years, for more than a year, right? So that is the sort of Elliott wave portion of the analysis which I highlighted to you. Now this is similar, this is not the same, and then you club it with other things. So for those who are understanding it good, for those who are not, watch the recording again. There was a question, what is high beta and about high beta stock. So you're not supposed to look at exactly what the stock is, high beta or low beta, but go with what are the signals and what are the analysis showing you. That is how I personally vouch for. Second is high beta can be low volatile on a given day, and low beta can be highly volatile in a given day. What is beta? Beta is the correlation of general market movement. Okay, it's got a, it's not the calculation with directly correlation, but with covariance. If the Nifty volatility is so much, the stock volatility is 1.5 times that. That is beta. Okay. Yeah, yes, Harshalji, I'm coming. Lots of questions are there. Don't worry. Lots of questions I have to answer. Okay. So that is beta. Now, how to select a script to trade? Obviously, there are a lot of indicators which I also teach. There are a lot of different various sort of homework which you need to do, if I may call it. There will be a homework which will be just sort of on Fridays you need to do. If you can do that Friday work, most of your week is settled. That work you have to put in. No selecting a script that will give you, and then giving you depths of how to enter, that you decide during the market hours or you decide one day before. That is fine. So you can select a script like that, like we spoke about Indigo, we spoke about Ashok Leyland, and so on. So I hope the beta question is answered. If I have to be many more specific, you can ask again. So that is what, if I'm looking for high beta stocks, then if my patterns are right, then the high beta will yield. If the patterns are not right, it will not yield. But yes, for the subjective understanding, go to those stocks which you're psychologically comfortable. Like for example, someone may not be comfortable with a stock like UPL. Okay, if they find it too choppy to their comfort of psychology, don't trade it. If somebody finds Bank Nifty too choppy, don't trade it. Okay, now that choppiness can be cut down by filtering out into the higher time frames. If you're using a certain time frame, maybe you're doing that thing wrong. Maybe you're looking for very very high beta stocks in very short time frame. That has very high chances of taking you out of the uh, or getting a series of wrong trades, because it is highly volatile also, and you're looking for choppy markets to trade in. So go for a higher time frame. Automatically you will filter out the noise. Have wider stop losses for high beta, because if having something is having high volatility, you want high stop losses and high targets both. So you can't afford small stop losses. Okay, there will be rare occasions where it will offer small stop losses, but for your trading plan and trading comfort broadly, this is important, right? uh, I'll talk about setup. I spoke about scripts. I have some things lined up right now, so let me just get back to the presentation and continue the presentation. Then we'll head on again into some questions and some of the questions which are due. Okay, so first look at the time frame, then look at the trend. Now let me give you an example. A pullback, a pullback in the daily chart may be simply a pullback in the weekly chart may be simply an uptrend in the daily chart. Okay, a pullback in the weekly chart may be an uptrend in the daily chart. So a correction in the daily chart, that is daily chart 2-3 days market is going down or stock price is going down, it is just a correction. The weekly chart may be still in an uptrend. So go from time frame to time frame, switch according. You can't trade a correction, can't you trade a pullback? Yes you can, but you got to be aware of it, what you're looking at, what are the probability. The most important is conjunction with the other technical patterns. I think we have given quite a few examples to be able to elaborate on that. If we have a conjunction of technical patterns coming together, that is going to be phenomenal. It is going to lead you to the 1:4 1 is to 6 sort of, uh, or maybe 1 is to 8 and 1 is to 10 sort of this thing. So your stop losses are going to be accurate, your risk rewards are going to be accurate, you're going to wait for the trade, the market is going to reward you more immediate moves. The more you can have conjunction with patterns, that is important. Now Chan- Chanakya ji is asking most important patterns, how to analyze patterns, how to analyze candles. We are coming to that. So we come to, let's come to patterns. Okay, I just took a simple pattern. Of course, in a small webinar, I can't do. Yes, yes. Vishal ji is saying, why is it that you're not talking about demand and supply zone? It means the end of the day we aren't trying to figure out the zone where institutional money is buying and selling. No, thank you so much for your kind words and kind approach. Uh, Not really, not really. Now, when you're talking about demand and supply, it can be multiple things. It can be multiple things. Demand and supply zone does not really have to mean that this zone. We are looking for interaction zones. Yes, it is a part of what you're looking at. It is a part of the different variables which are there. I teach it. I of course have it over here. I'm just coming to it. But you gotta be patient. Okay? It's a part of all those things. But what you have to have is an understanding that is not the end of everything, and it is always a zone. It is never an interaction point. Okay, it's always an interaction point. It's always a zone. Okay, no, I won't tell that thing because that's not the only thing, right? And it is a combination of this zone along with trend lines, along with support resistance line, which make out the patterns. Most people, I saw someone seeing a very highly trending stock, and then someone said in a WhatsApp group or something, this is a supply zone. Now that's highly trending on a strong zone. It's strongly going up. And because that zone seems like a supply zone, to the T of 50 paise, he wants to sell the stock. That is not the right way of looking at it. Any interaction point will have price repelling or attracting to it, right? So that is the whole idea. And if that repulsion attraction is not the end of it, it will also have its breaking. It will also have the levels go up, levels go down. Some levels are just imaginary, they are not naturally levels. So these are subtleties which you have to understand by step learning, right? In a 2 hour webinar, how much am I going to go into deep? But still, I have taken up one pattern. So let's just look at the double bottom pattern. Okay, few things, very generally I'm saying few things. There are two bottoms which are very close to each other or exactly the same, right? Then we have a resistance, which is commonly seen as a resistance even previously before the pattern. So this is over here, this is over here, right? So these resistances are present, one, two, almost three, and these two clear bottoms very close to each other are there. When this resistance zone, and every resistance or support is a zone, it is never a number. Okay, so when this resistance zone comes about and the price breaks it, right? No, there's never a screen of a pattern, and the price breaks it, it breaks and it expands into an upward trend. This is a double bottom which is making a bottom. The target, the target is the range width, the width of the pattern is the target, right? Right. And the stop loss is obviously there are two kinds of stop loss. One can be middle of the range, one can be depending on the patterns with the structure of the move. I generally take the structure of the move. So I have my wave counts within the pattern, and there is a structure which is telling me that which is the best place to keep the stop loss. If the risk rewards are good, I would go with this pattern. So that is what I'm coming, that they are similar, they're not the same. Now what you looked at, that was a textbook style example. Now this is the real life example. In the real life example, this zone which you can see I have marked out, this particular zone is the breaking, but this breakout is not a breakout with the similar structure as the previous one which we saw in the textbook style. Okay, again this is a different sort of breakout. This structure and this structure are different, and this structure is again highly different. This is more of a one-sided clear straight going breakout. So the structure of the moves will be different. The patterns broadly look the same, right? Now, understanding all this about technical analysis and then understanding about what is going on in your own head, both are going hand in hand with trading. Now, coming to the questions again. Harshal ji is asking, is the screener for pattern? No, there is no screener for pattern. You have to identify it. You have to work on it, right? Vishal ji, okay. I think I've answered your question. Interaction points are also there. I'm coming back to this slide for everyone. Let me see if I missed some question. How to find stocks to trade for that day. There is a YouTube channel which I have, Mohak Pachisia. You can type on YouTube, you'll find my channel. There's a webinar I conducted on day trading. So, Mr. Reddy, I think on day trading and Srikanji, on day trading, you can go and find that, how to find the particular stocks to trade for that day. So, that will be a good thing. You can use that. Uh, okay, what should be the parameters for day trading, Sanchari ji? Parameters, again, you can go to that, and like high beta stock you said, not really. It has to be more driven towards what is clearly identifiable as a trend. If I am looking at markets, I'm trading, I'm looking for real trends. So for example, Reliance, I may not trade for 2 weeks, but when I saw a real trend over there, it grabbed my attention. Puneet ji asking how to trade in choppy markets. The answer is don't trade in choppy markets. If you find yourself in choppy markets, reassess your time frame of trading and entry point, and then you look for the more clear trades, or you will be in less chances of being in the choppy markets. It is some days okay to have choppy markets. Every day will not be a smooth trending day. Okay. The most important thing where I can tell you over here is don't look to trade every day. Don't look to trade every hour. Right. Sanji, Srikanji, again, I've answered your previous question. Ashokji asked that, there's some things which give us very good signals when we back them on the computer, but when they execute, those indicators don't give. This is where I'm coming to now. Okay. So let's take time frame trend we've taken, different technical patterns we have understood, right? Now let's come to indicators. Now, obviously, there all the indicators which are there, they are telling us about various things. Okay, they're telling us about various things. Telling us about volatility. So there are volatility indicators, the momentum indicators, there are volume based indicators. Most of these indicators are lagging indicators. That means price में पहला reflect हो जाता है, indicator में बाद में, because all these indicators are a calculation of the price. If something is a calculation of the price, it can only take in that data to change after the price movement has happened. So that becomes a very useless part of the indicator. So where the indicators can help you are certain spaces, like for example, there. So when I teach even moving averages, my moving average is very different from other moving averages. It is not just about the crossover and all, because the crossover will happen 2 weeks later. Crossover has happened 2 weeks ahead of you. You are 2 weeks ahead of the crossover. What will your risk reward be? So indicators are okay, but don't depend on them. I particularly use very highly RSI, which I believe is one of the indicators which gives signal potentially before the movement. So we have a lot of things combined there, and RSI beautifully comes together even with following the trades which you're already in. Um, so indicators don't rely on, and as Ashokji said, some of these indicators when we backtest they seem like a fairy tale, but then when we go and execute, okay, okay, Abhishek ji, we'll come to that. When we go and execute, it fails because the indicator is moving along with the price. So there is a latency, no latency. It's just moving along with the price. The moment I see this particular price heading towards this moving average, if I buy, there is always a chance it will come down. There's always a chance it will keep going ahead. So all this, in simple words, is not tradable, right? In simple words, is not tradable, right? Leading indicator, if you are using RSI the right way, I feel it is one of the best things as a leading indicator. But other than that, leading indicators are very, very less. uh, I use multi-confirmation trade. That is what I said, no, Harshilji. Multi-confirmation means confirming with multiple variables, right? Basic prices, basic trend lines, price interaction levels, as someone had spoken about. So price interaction levels or price interaction zones where prices both attract and repel are very important. Patterns are very important, right? Basic trend lines are very important. As I briefly discussed, please join 3 points, otherwise geometry, not technical analysis. Japanese candlesticks and the similar type of other candlestick patterns which are there. Elliott wave theory, I vouch for the most. Now, all these are different sort of school of thoughts. Now, basics are a very classical school of thought. This is a must, must. You have to master basics to be mastering anything. Candlesticks is a different way of looking at. Candlesticks define as a flow of the market, the emotion of the market, the emotion of the markets. People who are talking about candlesticks can you to the YouTube channel and find the candlestick video. Quite nicely, I've given in candlesticks in it. Elliott wave theory. Elliott wave theory are few of the, and likewise neo waves, GANs, harmonics. These are few of the concepts which are away from the basic structure of the market. So the physics of the market is not accounted for, but there are potentially things which are going to happen, amongst which I prefer Elliott wave theory and find it the basis of every kind of analysis, and it has worked with amazing risk rewards over the course of time. It has also enhanced magically my understanding of price mechanism otherwise. All of the students have also found a lot of success with Elliott. It looks for a little practice, but yes, it's really worth it. Um, some of the things are so immediate in class, so detail we do in class, no, immediately the students understand. The rest, little practice and then exponential growth. Indicators, again, as I came to, you have to be very wise. Indicators are sort of a little bit of a lollipop which are given to you sometimes by websites and Google, that this will happen, then this will happen, this will happen, and this will happen. All that mostly I want to say is less tradable in simple words, but I can say it is nonsense also. So you can avoid some indicators for some time, and that will help you, because that will help you focus on the price movement more from the conceptual variables that are hand in hand with predictability. The predictable power of indicator loses the risk reward, so that's not worth it, right? Then you have derivative analysis, which are analyzing contrarian signals through put call ratio, through. Okay, 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 I'll come to that. We can put some derivative analysis, which are put call ratio. We can use for open interest. We can use for the change in open interest, the volumes OI, etc., etc. The volumes put call ratio, the OI put call ratio. You can use derivative analysis with the fresh longs and the fresh shorts and all sorts of things with the futures other than options. So FNO, if you take up, you can analyze through that and have filters. So many of my trades have that as well, and of course there are more things over time. So these are like very simple categories which I wanted to take up. Then I'll just take up, a student recently spoke about it, and I think this will answer your question, Vishal. When we spoke about when you just said, asked the question regarding what we can call area of resistance, please put some light on the void, what we call area of resistance. Are you talking about psychology, or are you talking about price? Yes. So let's look at this. We are looking at the chart of IGL. Okay. Now, potentially, potentially over here, we see that there is major interaction. Now, I'm not making a very long trend line because we are not having so much time also. Okay. But if I retrace this back, it will give you what I'm showing, right? Now, if you look at the interaction point after the break of this trend line, which comes from here actually, right? Which comes from here. If you come to this point after the break, there is a interaction between the buyer sellers, which after that leads to a directional move. Okay. Now, don't ask me why is it not coming completely immediately into all downtrend. Retracements do happen. That is how the buy price mechanism is. Market doesn't go up and just doesn't go down. Okay. So this congestion point is a very strong interaction point. Now, if you see every time the market is trying to at, get attracted to this point as well as get repelled from it, get attracted to it, get as well as repelled from this, and this entire space is a zone. It is a zone. It is not a particular level, it is a zone. So this zone of interaction is something which is highly important for us to understand, and then go and look for what the price does when it comes to that zone. So a support and this thing is not a level. You have to see if it is actually taking a support or taking a resistance. Those things matter a lot, right? Obviously the previous high and the previous low are natural resistance and supports, but they are just from a very general level. But generally, if you're looking for a resistance to break, okay, for example, you're looking for a resistance to break, then you are supposed to look at then you're supposed to look at, say, I'll take this example over here. Okay, I'll take this example over here. You see this zone to break, first of all we saw that this particular resistance has broken, and then this is broken after that again. So assumption of an uptrend and then assumption of the resistance zone breaking. Okay, so I can take up any chart, and I can do the same thing. Also I can see that what happens when the price comes to these levels, comes to a support zone. I can see the polarity, the resistance and becomes support and support becomes the resistance. So various things one can see and one can understand decipher from. We have the Elliott wave theory, the wave structure, basically 5 wave up and 3 wave down. So but this is not the end of it, right? Why? Because as you see, the wave structure on the textbook is not how you will be seeing it in real life. There you need to identify, you need to see and learn from examples, you have to give it time. But some things are very very simple about it, which I told you earlier also. So a 3 wave down is a corrective wave, 5 waves up is this thing. And the beauty of it is that because of the extension is just one part of the game. There are truncations, there are various other things in Elliott. It really comes about. So I'll just take up this example. Now this is the Nifty 2000, and this happened in 2013, right? This is February 2014, right? And this is a ABC wave structure where wave A is this, B is this, and C is this. So you see this entire wave structure, but it doesn't look like how it looked like in the previous slide, correct? Also, wave structure comes first, then will come the different things like retracement and all. And if we see, it's accurately come to this this retracement level, right? After that, so Modi government and all that moves, 2015. After that, now let's come to candlesticks. How many people interested in candlesticks? I think it's getting heavy for a lot of people, or can we go on at this pace? Right? A lot of candlesticks questions have been happening. Now, candles explain you the emotion of the market. Okay, I'm not getting too deep because I personally take in my course, I take like 4 classes only on candlesticks. Very detailed. We take up a lot of types, etc. So what happens is that candlesticks are generally telling us about the emotion of the market or the flow of price movement. In one level, patterns which I spoke about, or resistance zones, support zones which I spoke about, those things generally show the structure, and candlesticks generally show a flow, a structure and a flow. And for a trader, combining the two is very important. So I can show you a multiple candlesticks somewhere, but if I cut it open in the hourly chart, it will show you the structure. But you always, that is not the only kind of trade. There are multiple types of candles which help you. Candles also help you to say, is there a pattern forming? Is there a volatility? Is there not a volatility? Is there a trade supposed to be taken? Is the move which we are seeing in one direction going to soon fade away, soon fizzle out? Those things are also represented by candles. So that kind of thing is there. Now, for example, the Nifty view I had made recently, that someone who has learned even a little bit of candlestick will come and say, Nifty, why did you say it is bearish or sideways for the day? Why? There was such a good candlestick yesterday. No, that is half baked knowledge. Half baked things don't work. It is always a combination of things. So, candlestick first lesson, learn different time frames. For those who are just looking at candlesticks as red and green till now, understand a red candlesticks, depending on what time frame, daily, hourly, whatever the candlestick is, it has opened during the day or that period at this level and closed at this level. So this is a red body, red candle. In a green candlestick, where the price is gone overall up, opened at this level, closed at higher level. Therefore, green candlestick. And the distance between the high and the open in this case, and the close and the open in this, the close and the high in this case, is called the upper shadow. तो अगर अपने इस पूरे कैंडल को कट ओपन करके देखे, ये रेड वाले कैंडल को, if I open, price opens over here, goes high, makes higher highs, goes down all the way, makes a low, pulls back a little bit and closes. So if I cut open the red candle, this movement will be shown to me, right? If I cut open the green candle, what will be shown to me? Price opens, dips a little bit, goes higher, higher, and it's a little bit profit booking and closes. So if I cut open this green candle, this is what will be shown to me. So this is how the candlesticks are representing the entire day's move, and a very detailed study, very useful and very interesting. If I take candlesticks, suppose I took a candlestick pattern, which is a hammer. Okay, a lot of people have heard about the hammer pattern. Okay, now obviously it has a lot of properties, so I'm not getting very much into details. But if a hammer pattern I take, and on the other end if I take a bullish piercing pattern, both in its essence are the same. So in the piercing pattern, the price went down the first day, and the next day it went significantly up into the previous candle. While in the hammer, both the things happened in the same day, right? Same thing for shooting star. So dark cloud cover, which is a candle, which the second candle represented a bearish move. This happened in the same day itself. So if you blend candlesticks with candlesticks, if you blend candlesticks with various other concepts, you can commonalities of flow, commonalities of trend fizzing out or coming up again, can show yourself. So if you look at this particular chart, there are two hammers, almost three, but there are two hammers. They have an effect on the price movement. Obviously, for those who have the right eye, for those who have learned, those who have taken something from here, you can already see that there is a ABC also over here. ABC move, right? You can see this clearly, ABC move, right? How many of you can see what I'm saying clearly? Raise your hand, please. Right, so this kind of thing is there. So combining candlesticks with that, but of course similar candlestick I can show you 5-6 places even recently. So this has led to a more powerful move. Now that has helped me to place my risk reward over here, which is my risk is over here and my entry is over here, and it has shown me the power the price can take along with the Elliott to break this resistance pattern. So this resistance is broken very significantly, and then you can talk about as many things about the risk reward as you want to, because this is indefinitely going up for a very long period of time, then going down of course later. But yes, so you see how I can placed myself with candlesticks where the other parts of technical analysis are not helping me, whereas the other parts of technical analysis help me in certain times where candlesticks don't help me. Now a little bit about a chart over here. You can see how the trend line is coming down. Touching point of the trend line and touching point of the Fibonacci retracement is the same. At the same time, the wave structure I've counted. Of course, I've not shown the counts because I have to zoom in and all that. But I'm just giving you an example. So how the trend line baseline and the fib level both are combined at a certain point, and then the trend line is being followed. So this is Biocon, uh, quite long time back. I've been taking these screenshots of certain different patterns from very long time. For my learning, I do it. This you might see in some of the blogs I've written previously, etc., and so on. So now this is with Mahindra and Mahindra back in 2015, I guess. So again, the wave counts on the weekly were very clear. Okay, so you see these things happen repeatedly, and you see these things happen on a very nice level. You see the Fibonacci numbers are widely present in Mother Nature and in human psychology because we are a part of the nature. Widely present in Mother Nature. And there's to that end, you can see the same measurements throughout the human DNA, helix, the Milky Way galaxy, flowers, petals, like the shell of a snail, etc. So you see, all those things happen, and I think we have discussed very widely about a lot of things. And you know, of course, I want to leave you with certain things that you have to have a very basic idea of a clear belief system, right? So that's where the psychology plays a part. So when you are under stress, when you're not knowing where you're going, you have things like resentment, anger, worry, dread, and all these which lock you into a clear, repeated actionary pattern. And these are behavioral patterns which happen because of your own limiting beliefs. They also trigger these emotions and take emotions as the base to make you act in the wrong way. And I'm just telling you, if you are suffering from these things, please change it. Because we have a brain, a mammalian brain, which has learned to be in the fight or flight zone. And it does not know probability mindset. It just knows kill or get killed. But probability mindset is something you have to train your mind to. It becomes easy to train your mind to that once you have the correct knowledge of technical analysis. And leaving you with a very positive idea. I hope you took away a lot of these things from today. Please go to the take the recording again. And this is what Rakesh Jhunjhunwala, he himself claims to have made a lot of money trading, but he also admits the same. And if he's saying that trading is against human nature, please understand by yourself too that you have to train your mind in a different way to be able to stand out. And as Napoleon Hill said, most great people have attained their greatest success just one step beyond their greatest failure. So, for those who have seen things which are getting confused, this is one for you. And to end today's session, I teach a course called Technically Sorted, which is a 15 session course, an online course, a webinar based course, just on this platform, like a webinar based course, which you get the recordings of. It's a Saturday Sunday course. So we do Saturday Sunday. So we do Saturday Sunday, say for example 11 to 1 in the morning, and the recordings are available till 1 week. Check out the recordings till 1 week. I've been teaching this course over 3 years now. First I did it in Calcutta, did live, done a lot of workshops also. We keep doing that across different cities whenever we get the time, and you will get a lot away from it. It is also about a structure, a practice, a way of learning step by step, a way of learning in a way which adheres to practical trading, how you can actually take trades which are tradable. And I welcome you all. Whoever wants to, shows interest, finds interest, please do contact us. It's a 15 session webinar course, 15 session webinar course, which goes along for Saturday, Sunday, 2 hours each, 2 to 2.5 hours each. The recordings are available. The entire course curriculum will be messaged to you in the Telegram channel. And if you are interested, the course fees is 15,000 rupees. 15,000 rupees. Of course, it is priceless, but I have to give it a number. So 15,000 rupees. For those who are interested, really eager, you can contact my friend who is also part of my team, Mr. Chavan Krishna, at this on this number, and you will get, if you do it within 1 week, you get a discount of 2,500 rupees. So for you, the course fee becomes 12,500 rupees. So 12,500 rupees is the course fee. If you enroll giving a small advance, you can contact on this particular number. If you give a small advance, you can enroll within 1 week for 12,500 rupees. And if you want to take it later, you will get it only for 15,000 rupees. We'll have only limited seats and time period for this offer. Lastly, really, genuinely speaking, these webinars for free, which I do, my name is Mohak Pachisia. Here you can see very clearly. This is my name. You can type for the YouTube channel for those who are asking. Genuinely, I see all these free webinars are very clear initiatives from my end, from my team's end, and these are genuinely to give you substantial things which you can take away from it. Obviously, I will talk about my course because that also is a part of something which many people will be interested in. Those who will not be interested, of course, we will cross our paths somewhere or the other later. So, thank you all for coming today. Thank you all for being a part of and making my Sunday very productive. And I hope if I have missed out any question, little bit here and there, please, you're welcome to ask questions otherwise to me. Look it for all the videos. Look for all the videos in the YouTube channel. I'll be uploading this one as well. And genuinely thank you for coming and taking the learning today. It really goes to show that we all are here to actually learn and bring ourselves each other up, and my little part I've played in it. So obviously I would highly recommend you to join the course, because if you're looking for a trading journey, we have had more than 100 students who have learned from the course and have done workshops with professional traders also. Is going to be a really so I'll be covering futures and option. I'll be covering any kind of medium term investing sort of trading also, if someone is looking for more investing sort of thing. it I'll be covering every kind of trading, because technical analysis is fractal. We'll be covering all these concepts which I spoke about, the different various technical concepts, derivatives, etc. So there's a wide plethora of things I'll be covering, which I'll be messaging to you all. You all will come to a inner circle group which will be there, and that is how we will take on, and then we'll make a course group for the particular batch. We are starting off this March end towards. So if you want to book a small advance, 12,500. This low I have never made the fees, but 12,500 you're getting it right now within 1 week. Contact on this number, Mr. Chavan Krishna, and you can get that little discount for your time initiative to come over here today. Thank you so much. Thank you so much. If you have any questions, please post it in that number itself. I will be taking in every query also, but immediately move because we have limited seats for the discount. I will not be able to promise later. Okay. Thank you so much, and do keep coming to such initiatives, and do consider, really consider learning for yourself from everywhere and anywhere possible. Okay. I'll be ending the webinar now, and I'll see you soon. Bye bye. Thank you. Thank you. Thank you. Thank you all.